Yes, good evening, family. This is your boy Skag here on behalf of Profit Society. Hope you guys are having a great evening. We're going to get this thing kickstarted in about 2-3 minutes. Feel free to drop those locations in the chat. Let us know where you're tuning in from. And feel free to share out this link to anybody you know that wants to get a jump start to their trading week. We love and appreciate y'all. And again, we will see you guys in 2-3 minutes. All right, family. What's going on? How you guys doing? How you guys feeling? Let me see who we got in the chats today. Good evening. Let's see. We got Tyson Trading. We got that boy Limitless AD. We got A. Williams. We got David. We got Matthew. We got that boy Alex in the chat. Was good. We got Jose, Daniel. We got 7 Circles of Success. That flow is vibing. Let's go. We got Chintaka in the chat. Cozy. Let's see, we got Swaziland, SZ is in. We got New Mexico, Bahamas. We got South Florida. Got that boy Abel in the chat too. Appreciate you, my guy. Let's see who else we got. We got Colorado, Texas in the building, North Carolina. Let's see, we got the Brooklyn family in the house. Got that boy Eric Jackson out there in Indiana. Right, the boy Eric in the chat. Right, shout out to all my Erics in the chat. I know there's gonna be like 3 of you. Shout you all out at the same time. But what's good, Eric? How you feeling? We got Irwin out in Raleigh. We got Houston. Right, we got Free Zone Lou. Right, salute to you, my guy as well. Profit Society and the whole chat. Yeah, love that you're showing chat. Love to everybody in the chat, my guy. Definitely appreciate you. Right, and boy Alex is out in Wisconsin. Yeah, you guys know we live. We here. We ready for another fantastic week. We got Vermont. We got that boy Jamal. Why did the name turn into random color? It's because you tagged us. That's what it does. It just highlights the tag. That's all. We appreciate you, Lou. Checking in from New Jersey. We got that boy Nico. What's good, Nico? Good to see you on the chat, my man. We got Louisville. We got McCall, New Jersey, Nevada, Georgia. Let's go. That boy global, he said. Or not, maybe not global, but he countrywide. That boy dropped 3 different states. I love it. Go GJG UK. Yeah, we'll get into all that in a second. You already know. Shout out to that boy Ray out there in Houston. We got you on the call as well, my guy. We got AZ. Yeah, shout out to AZ family. You guys know I gotta love my AZ fam out there. One of my favorite states. Got Charleston in the building, Atlanta. Gold land location. we got we got China in the house. Is that the country or is that the balloon? Right? Are you tuning in from the country or are you tuning in from the balloon? Let us know. I know you just trolling, Sean. Let's see. We got Jude in the building. Right. We got North Crackalacky. Y'all clowns, man. We got Ghost in the chat. San Antonio, Nigeria. We got a few jokesters in the chat. It's all good. Listen, I love and appreciate y'all. But what's good, family? As you guys know, we got the Sunday market prep call coming underway here. I'm going to move over to the economic calendar because, as you guys know, every Sunday we like to start off with the fundamentals. But actually, before we even do that, let me just make sure that the boy Abel and Ray both get a chance to say what's up to you guys. So Abel and Ray, if you want to unmute, say what's good to the chat. Let them know how you feeling. All right, the floor is yours.
Yes. What's going on, family? Super excited to be here with every single one of y'all. Hopefully you guys can hear me loud and clear. And yeah, man, I'm excited for this week. I think it's going to be an absolutely phenomenal week. And I got to get my get back from last week. But yeah, I'm excited to see what we got in store for this week for sure.
What's going on, family? Hope everybody's having a phenomenal weekend. Just ready to get back into the markets, man. Ready to have a phenomenal week. I'm already seeing some things that I'm pretty interested in, so we'll see how it plays out. I'm excited to trade with all of you guys this week.
Oh, that boy Ray sounds like me. Because honestly, some of these Sunday opens got some questions for me. So, yeah, we'll dive into that in a second. You know, Ray and I will take a look at some charts, Abel as well. And we'll see if, again, if nothing for today, at the very least, some stuff for the upcoming week. Just want to shout out the last few locations that we got here: New York, Houston, Texas, Homestead, Florida, Brisbane, Australia. Right, shout out to y'all. Shout out Tony Montana. All right, let's go. Let's jump over to the browser real quick. Let's take a look at some of these upcoming fundamental events. I have not got a chance to check, but last week was very news intensive, so I'm going to imagine there's probably not too much, at least in terms of rates this week. Well, let's take a quick look. So we got some soft data out of euro and the pound, some retail sales for euro. I'm really only going to be looking at some high impact stuff, so all of the soft data really not going to be too important to me. We do have some PMI out of Canada, which will be interesting on Monday morning. Some trade balance out of Australia as well. Then there actually is going to be an interest rate decision. Funny enough that I just said a lot of this was last week, but Australia obviously going to be doing their interest rate decision Monday night. They are expected to do about a 25 basis point hike here, increasing the trajectory up. But again, their rates have not been too crazy, and they are once again taking a page out of the Fed's book of, moving towards this 25. Actually, I think they've been at 25. They've been a little bit on the lower side of things. So nothing game-changing out of that rate hike. Pretty standard for what we've been seeing. We have an unemployment rates for the Swiss franc Tuesday morning, as well as some more soft data throughout that same morning. Trade balance for the USD. We have Powell speaking here at 12:40 on Tuesday. This is not going to give me any details of what he's speaking on, but we'll see if we can maybe get that. We also have, more speeches out of the Fed, so we'll look into that on Tuesday. Interest rate decisions over there in India. Let's see what else we have on Wednesday. Yeah, really not too much. It looks like it's going to be a pretty light week. There are inflation numbers, again, for a whole bunch of, other countries, if you guys trade exotic pairs, these are things you're going to want to look at. Typically, we don't talk about these exotics on stream, so probably not going to pay too much attention to these. But again, like Brazil, China has inflation rates, so on and so forth. Initial jobless claims coming out for the USD, which is probably going to be pretty low given last NFP's number, to be quite honest with you, which was an amazing number, by the way. Shout out to Friday's NFP number. And 53 or 54 year low in unemployment, one of those two. So interesting data there. Some pound, again, soft data coming in on Friday, but again, it looks like it's going to be a pretty light week. So unemployment numbers out in Canada will be interesting to see how this compares to U.S. numbers, if they get some sort of shock number here as well. Again, not really going to be something I'm specifically be looking at, but for people that trade USD CAD, with the shock numbers coming out of the U.S., maybe you also get some shock numbers there. And then there's just more speeches to end the week. So this is actually pretty light, nothing too crazy. I think on terms of my radar, there's probably nothing here I'm too interested in. I mean, interest rate decisions are always going to be interesting to me to see what central banks are doing. But overall, this is a pretty light week, and I don't think there'll be any fundamentals that will be impacting the way that I'll be viewing the markets specifically. Abel, you have any thoughts? Ray, you have any thoughts real quick on the fundamentals before we jump into some charts?
Nah, I don't really got much personally on it, because not that much news is going to affect the currency pairs that I normally trade. So I'm pretty much going to be good.
Yeah, that's what I'm kind of seeing. These are not really news events that I'm particularly going to care for. And again, we had a very volatile week last week, so or high impact news last week across the board. So it's pretty common for us to have light weeks going forward. So, family, let's move into some of the actual chart stuff, because I do want to discuss some of the stuff that happened last week. If you guys have pairs that you want us to review, feel free to drop those in the chat. Now will be the time to do that. We'll be more than happy to go through. So I guess we'll just start off with the dollar index. Again, we'll keep this like round table, so everything that I kind of go over, I'll make sure that I get the boys' opinions as well. So let's kind of hop over to the dollar index. Last week pretty much gave us exactly what we were looking for out of the dollar index. So if you joined us on last week's call, or on Sunday's call, you will know that we were actually looking, with all the news that was going to come out, that we were actually looking at price spiking below this 101 low, and then giving us this potential rebound back into here, kind of looking at this as like a potential lower time frame accumulation to kind of explore the idea of it coming back up to like the 104 106 areas, and just kind of getting a finally just a relief bounce after this really kind of intense sell-off that we've been experiencing. And again, we talked about this being the most logical area, so we actually did end up taking this liquidity. So I'm going to change my little hourglass to a check mark, just to indicate again that we have now wiped out this level. I'm also going to just quickly make this a little bit larger. And the reaction off this has been very strong, very nice, very quick, very fast. Didn't spend much time below this 101 level. And I do have to say, I mean, again, based off the analysis, is precisely what we're looking for. You're going to see this across a lot of dollar pairs, like EU, gold. We have a lot to discuss on those things. I do have to say, I don't specifically enjoy how aggressive it was. And I'm actually looking at this with the idea of whether or not this actually wants to follow through. So I know there's going to be a few different opinions that we're going to have as individuals. I know a lot of people are going to be looking at like this kind of momentum and this kind of liquidity grab to kind of continue up. And again, this is ultimately what my idea was when we initially talked about this liquidity grab. But I am going to proceed with some caution. I do expect it to maybe continue this momentum into like the Monday, Tuesday. Again, it makes the most sense to continue the momentum that we left off with on Friday. But I'm going to be a little bit careful as we kind of come up into this 104 area, because I really would have liked to see this produce a little bit better of a spring that kind of got like retested and wasn't just like this immediate like knee-jerk reaction back to the upside. So I'm having problems trusting it, and that's I'm gonna just be honest. That's that's the view I'm gonna have. Because again, I would have liked to see it kind of play around, actually observe some of the demand, actually retest some of that demand, and just give us a clearer signal that, again, that this price action down here will be able to hold in like the shorter to mid term and actually give us a nice like pullback up into this area, which is ultimately what I was looking for, right? Ultimately, like looking to come take out this wick maybe up at like the 105 into like the 106. So this is still like my idea, but I will say if we do play with these 104 levels and we begin to come back down under this 103, I'm probably going to lean off the idea that a lot of this was, again, mostly driven by that NFP number, right? By those jobs numbers. And I do want to stress, right, because for those of you that don't know, the NFP number came out drastically higher, right? They were expecting something like 193,000 or 200,000, something odd like that. And it actually came out at like 500,000 plus new jobs, with unemployment hitting record lows. Now, this sounds great. The problem is like how consistent can you keep that, right? With such a high jump, all that tells me is that the next NFP number, more likely than not, is going to struggle to deliver the same kind of reaction. So that makes me a little cautious. Another thing that makes me cautious is with that many new jobs, again, my question becomes like, how many of those jobs are people working 2, 3, and hopefully not 4, but potentially even 4, right? And how many is that people coming out of retirement because, again, inflation has ran so rampant that, they kind of have to go back to work, right? So this isn't really, some people may see it as a strong economy, and I would say it's indicative of a strong, labor force, labor market, sure. But the reasons these people have to work either multiple jobs or maybe, have to go back to work after retiring and this on and that forth is what's concerning to me. So I don't specifically know if the Fed is going to like this. We know that they haven't really been enjoying stronger labor markets as is. It doesn't really coexist with their plan fully of tightening the economy. So yeah, I'm gonna be a little wary of this. Like I'm not. I really have trouble trusting it. So I'm gonna be taking a look at this 103, 104 level. See if we can kind of get some sort of reaction. Maybe what's actually happening here, isn't sustainable. So specifically on like these 4 hours, again, I'm gonna look at like, these lone candles, which are something that again I teach on a lot. So basically, up in this area here is where I'm gonna be eyeing to see whether or not demand could really sustain itself. Because again, I do think off the backbone of the data that's driving us this high is doesn't seem like data that's going to be consistent. Now, if we printed something like 280K and like we were increasing jobs, but it was like a slow and steady thing, and that would be a better sign for me. But this happening this quick, and then you're getting kind of like this knee-jerk reaction that really didn't test back down or like give you anything. Because even in Wyckoff logic, right, if we're going to say that this is a spring, there was no test to the spring, and that's concerning. So without any actual test, we don't really know, again, if this demand is quote-unquote sustainable. So even though we get this knee-jerk reaction, I'm going to be a little bit careful at these levels. Again, I would prefer to see it coming up to 105, 106, because this gives me kind of like a longer-term, better, area to scale in, and that's ideally where I would want to see it. But again, reading off data, and again, how we gapped open on the week is making me believe that this is just going to sucker a lot of people into the dollar, and that it's actually not going to be sustainable, and we probably will continue lower. So I do know the boys might have a little bit of a different opinion on that. Again, I'm not even fully solidified on this myself, but it is my job as the individual to like observe what most people are assuming is going to happen based off of this, and apply logic to it in a way that makes sense to me. So again, I need to see what kind of follow through this has on it. So Abel, Ray, you guys have any thoughts in particular on the DXY itself before we jump into gold, EU, and all those other things?
Yeah, so I mean the dollar itself really did have a massive run off the back of jobs report, jobs numbers, labor's markets, whatever you want to say. And to be honest with you, I don't know. Actually think that this strength that we're seeing now will possibly hold. I actually think that this could be a potential shift. Obviously, I could be wrong, but I think that this could be a potential short-term shift that brings us a lot of strength back into the dollar itself. You know, we haven't really had no crazy data that would spook the Federal Reserve in a while. And this jobs report is definitely one of those releases that will spook the Federal Reserve into, having them want to at least keep the idea of continuously raising rates. So I'm more so thinking it from that perspective, right? Because it has been a lot of great news for the Fed in terms of what their whole game plan is. And this jobs report that we just seen definitely will throw a little bit of a wrench into their plans. Definitely throw a little bit of a wrench into their confidence that they've been having lately. And I think that it can also bring a lot of optimism into these markets, or not a lot of optimism, but a lot of fear more than anything into equities, because now people are going to be thinking about, damn, all right, what can the Fed be thinking about now? So I don't know. I definitely think that it's going to be interesting to see how this thing plays out this week. Now, obviously, we had such a massive run up to the upside, right? If we do swipe that 104 level that you were referring, or whatever that level was, there is a chance that we do pull back. But I'm still very much going to be expecting more continuations to the upside personally. I would love to see price go ahead and take out that 104, then take out the 105. And then once we take out that 105, I believe above that 105, it's really going to be the deciding point for me to see if we continue to demand even above those levels. Because if we continue to demand, then obviously the dollar really could have truly been back into its bullish cycle. But if demand isn't as strong above 105s, near 106s, then yeah, we could very much well go back into more of a bearish trend for the dollar. But for me, I think I'm leaning towards more so a lot of strength after this short-term pullback, personally speaking.
Yeah, that's definitely interesting thoughts. Again, I feel like there's a lot of people in that same boat, and again, like I want to be in that same boat too. Just to get some, like, again, better pullbacks in the dollar, because I do ultimately think it will continue lower. I don't see any reason why it would again, fundamentally have a ton of strength. But again, we will see what we get this week. Ray, you have any thoughts on the DXY specifically, or you want us to jump into some pairs?
I'm looking for 104 as well. And I'm looking at this as more of a retracement. Just due to the same stuff that you said. With the markets being able to sustain these numbers, that is something that I see being problematic, just due to the fact that although things may be getting a little better, I don't think it's great to the point where we're finding a bottom in the market. So just for this to be long term, that's a concern for me. And also these lows, like that low that is actually causing the retracement. Although we can say it did, sweep out of that consolidation, and we can argue whether or not that's a sweep of the liquidity and potentially a protected low. I just feel that if we're going to break out of all of this accumulation, I feel like it'll give me something a little more concrete, something a little more obvious, and a low that has more strength inside of it versus a low that I kind of have to question and look at sideways. So just with that, I do believe we'll take out 104, try to play around in that imbalance up there, and then potentially push back down and make another low. And then once we actually sweep that low again, we could potentially get some bullishness.
Yeah, I agree. That's for me, again, it's just really what's gonna happen up here. And I think we're kind of all in alignment that, like, this will be the area that kind of gives us, the idea. Even if I was looking, again, even if I was gonna look bullish, regardless of, what happens up here, even then, I wouldn't mind something like this, where we maybe come and like test below this candle, and then, you know, just give me more confirmation then again that these lows will hold in like the shorter to the midterm. Because again, I really, you know, I agree. Like this low is a little suspect. Again, typically you don't want to see, especially in Wyckoff logic, there has to be some sort of test to the spring. And I get it. The news, you know, didn't really allow price to test appropriately, and some people would maybe even argue that this is the test. I would personally disagree with that, but yeah, it's gonna be interesting to see what we get. I do know that again, this is gonna be analysis that is kind of tearing, you know, people to two different sides. You know, 'cause we all have our logical reasons. Again, like I can't disagree with the rally that came from below 101 because I was also looking for it myself, and you know, we warned people of that all last week. But I gotta say it didn't happen in my preferred way, which, you know, doesn't really mean anything. You know, at the end of the day, I'm not a market maker, so if the market does want to dictate that, again, that is sustainable enough, then so be it. But I don't have, personally speaking, enough proof of that just quite yet. So yeah, interesting to see what we'll get here. I did want to talk about gold because gold, again, very specifically did exactly what we talked about on Sunday. It did come up to this 1959 level. We talked about how, again, with the news, we should push above this 1959 level, and that would be the optimal area to begin looking at shorts. I do want to be transparent. I did not take any shorts up here. I immensely regret not taking any shorts up here. I really should have just pushed the button. Couldn't tell you what was wrong with me in the moment, but, you know, sometimes in the moment you just talk yourself out of following your plan. Basically, my plan was I wanted it to hang out up here. Again, I wanted to spend more time actually creating UTADs and retesting and whatnot, and I actually wanted to go short from up here this week, but very clearly, we're not going to get that. So we had a really harsh sell-off in gold. I mean, like damn near 1,000 pips. Pretty crazy. Pretty intense move from that 1959 level. So shout out to the people that did take it. I think there was somebody in our Discord community that actually smacked this. Yeah, Eric smacked this perfectly with that 1958 entry. So shout out to you, my guy. I know you're still holding that as of now, or at least you were as of 3 hours ago, because I see it in the Discord. So definitely shout out to you for actually executing off that idea. You were a better trader than I was when it was up there, so I definitely want to give you your flowers. But again, this thing has aggressively fallen to the point where like it even wiped basically where I was looking to target. I mean, you know, I was expecting 1959, come take out the last reaccumulation cycle. It moved down on a lot of volume, but again, like now that we've captured this, like I'm hesitant to assume that this is going to just continue down, because the way that I trade, I probably should have been striking buys, you know, below this area, and the market really didn't give me an opportunity to. I mean, we kind of like gapped down, and that was like really the only opportunity. But with spread and everything at the open, it just wouldn't make sense. So I'll probably look at something like tomorrow morning if we can get a retest. But yeah, with this, again, I know a lot of people are looking at this from like a distribution schematic where like this is a UTAD and stuff like that. And listen, I fully agree with that analysis. But again, these highs and these inefficiencies leave something to be wondered about. It's like we didn't get any sort of retest to the UTAD. Usually you do. Usually you get like an LPSY. And I know there's a bunch of people, again, that do trade Wyckoff logic that are going to look at some sort of pullback here and then look at something like this. And I've even seen people with like crazy enough targets that think, you know, you're going to like erase all the way back down and like take out these lows. Again, completely illogical? No, not really. But fundamentally, I find it hard to believe the dollar's going to see that much strength. So again, on gold, I'm leaning again off the idea, and maybe again tomorrow, because it is Sunday. Maybe tomorrow we get another 4-hour daily candle that does push down into here, into this candle preferably. But I do think, again, like we're going to play inside of this area and then probably just end up erasing some of this. And the reason that I say this is because I've kind of seen this before. And where I've seen this, and I hate to jump around to another pair, but I just want to come up into like a USD JPY, where it's like you kind of get these same ridiculous moves, you know, inside that do look like distributions. And I actually put a video, not on this YouTube, but on my personal YouTube when I was still uploading to it, about like the distributions that like live inside of here and the distributions that like lived inside of here. And although those distributions were valid, eventually in the long-term aspect of things, and like you can even like look at like this distribution here, which is like probably like the better examples. Like let's just go like look at this on the 4 hour. This is the range I think I actually made the video on, now that I look at it. So it's like the same idea, right? Like you get this beautiful distribution where like, yeah, you know, you run the highs, you get the UTAD, you get the harsh sell-off, but like you take out the little reaccumulation, right? Just like gold has, right? You take out the little reaccumulation, but you never really follow through. So it's like, again, I look at this and I just look at it at like scaring people out of their long-term positions. Like if I was gonna say where we are on gold, I would say like we're literally like we're right here. So I look at this and I look at gold and I say, oh well, you know, whoops, if I could type. We're looking at like more or less the same thing. So again, I'm gonna lean to the idea. Again, do I think this is like the absolute low? Now, like maybe we could test a little bit lower. I prefer that if I can grab an entry right below here. But I do think, ultimately speaking, again, that this does have the potential just to kind of continue, and that the only reason you saw the sell-off like this was because you had a crazy shock number in jobs, right? The sell-off completely warranted. The little distribution up here, completely warranted. That the move, like everything about it is valid. But now you have to look at it objectively and say like, okay, what's the reason for it to really continue and spill over like that? What strength does the US dollar have aside from that report, which again is going to be incredibly difficult to you know, repeat. So I may be alone in this thought, but again, I've compared this rally in gold to USD JPY before, and if you're going to ask me, man, I refuse to believe that these highs stick, and I will continue trading to the buy side. So yeah, if I was gonna look at like some sort of setup on this, you know, specifically, again, I would need this to do some sort of pullback in the morning, maybe take out these lows, but preferably I would like to see this continue to move up into some of this like shaky supply up here. And then once we kind of break up here, I'll take a look at what kind of volume comes into the market. If buyers are continuing to step in, I'm going to grab the absolute next pullback, and I'll look to continue that. So I'm not fully convinced that this is going to be sustainable. And again, I'm taking this from my experience on other pairs that, again, have very similar stupid moves like this. And that doesn't mean, again, that like eventually it won't spill over, right? You know, because eventually, again, this hit some sort of peak and reversed. But I do believe this is where we are on gold, and I do believe that, you know, we should very easily get back up. And again, this aligns with my DXY analysis. Again, maybe you get that little bit of a push, but ultimately that's kind of what I'm taking a look at. So yeah, I don't know if people in the chat agree with me, if people think I'm crazy, if you just don't see the correlation, if you don't see the potential of it. That's cool, you know. This is something that I'm personally going to be watching myself, and if I'm wrong, you know, so be it. I'll adjust, and we'll look at the next areas of demand, and maybe we'll even make some adjustments to some of my swings that I'm in. But yeah, I did want to warn you guys again that like I've seen this type of action before, where like the distribution does make sense, the liquidity grabs all make sense, and ultimately you just kind of continue up. But Abel, Ray, you know, if you guys want to, you know, share your screens, drop some charts on gold, and share your opinions, you guys are, again, free to do that. You guys have the floor.
You want to check it out, Abel? I don't really have anything on gold personally.
Yeah, you can take a look at it. I haven't even looked at gold myself neither, like at all.
Fair enough. I mean, if you guys don't have thoughts on it, that's cool. There, you know, that's my thought completely. But I know if you guys don't trade it specifically, that's okay. So let me see what the chat says. Let's see if there's anybody in chat that agrees with me here. Let me see. We'll keep an update on this. All right, I see all the pairs you guys want. Don't worry, we'll get to them as we go on.
I got GBP CAD. I'm taking a look at.
Okay, let me just go through chat real quick. Let me see. Would you mind taking a look at XRP? We'll take a look at all that stuff. GU. Would that mean to scale out of positions like USD CAD? If you share the same belief as me, Gino, yeah, absolutely. You know, if you don't share that same belief and you see more upside, then manage it as you see fit. But I think, like I told you on Friday when we talked about it in the premium chat, was that, you know, if you haven't already scaled out some profits, you know, make sure you do that. If you've already done that, you know, maybe kind of continue to hold and see what their reactions are like, because you can always make an exit a little bit later in the week, albeit it might be a little bit lower than currently. DXY 114, yeah, I think that's probably a dream for now. I can see that happening. 80% continuation. Alex says he sees it. Makes more sense to go with the trend, and plus those highs need to be taken. Yeah, it's the daily highs that keep me bullish. Like, there's no reason for me to believe those daily highs don't get taken. But again, you know, some people will disagree. All good, Andrew. Welcome to the chat, my guy. Hope your game went well, man. Hopefully you guys caught that W. And if not, you know, I hope you guys catch the next one. But yeah, you always balling out, bro. We definitely appreciate you hopping on. Eric says, I mean, I agree with you. This is not going to be sustainable. Yeah, I think it's going to be hard to be sustainable. You know, other people may have different thoughts. So be it. Cool. Let's see. Obscuro, they just don't trade it, my guy. So we all have our watch lists of stuff that we trade. So if they're not actually gonna execute off of it, you know, we have our pairs. It's like me, like Ray just said GBP CAD. I would never look at GBP CAD, you know. So we each have our stuff. That's why we all kind of give our thoughts on things. Let's talk about, well, actually, Ray, is your GBP CAD like a setup for today type thing?
Yeah, it can be. It definitely can be. I'm just looking for the market to drop a little lower first, but yeah, it definitely could be though.
Okay. Well, because my thoughts on the rest of these pairs, again, EU, guys, you guys know my thoughts are going to be the same, right? If I'm looking at gold at continuing, EU is going to be mostly the same thing. I do think EU looks a little bit weaker. I will be honest with you guys. I do think that this will probably want to come play in this liquidity pocket down here. I'm just going to highlight this with a rectangle real quick. If only I used my toolbar to make things easier. I do think this probably has the potential to spike down here during London. Like I said, I would like to see gold kind of swipe the lows as well, and I would like to see some early week continuations. So I do think EU again has the potential to kind of come and like play in this area before we continue to the back to the upside. But my bias is going to be like this on most dollar pairs, right? It's the same thing on like GU. GU actually fell a lot more. And this, you could argue this is maybe like a type 2 distribution, but again, all of this stuff is coming and playing in fresh liquidity. This one, again, this has a lot of imbalance still to capture on the 4-hour. But again, ultimately, I'm looking at some of this stuff continuing. Like, I don't think these highs on GU are necessarily going to hold. This is just liquidity buildup that will come and get taken later. And I'm looking at these moves as more or less, you know, just finding and seeking further demand. I will say, though, in terms of, like, GU, I really wouldn't want to play with this anywhere inside of this fair value gap, this imbalance. I wouldn't want to play with it anywhere inside of here. So for this one, I'd probably wait until we actually get back above here before I start playing. Like, I'd rather grab this somewhere like up here on a low reaccumulation cycle than to play with like these lows. Because if we continue to fill out this imbalance, as you guys know, I believe that imbalances either need to kiss and go, meaning that like once you kind of started playing into this, you need to immediately rebound back up, or the more you play with it, the more likely you are to fill out all of it. And if it's going to fill out all of it, then you're looking at like this low to come and get taken. So GU, I'm probably going to ignore specifically because I don't like the setup as clear here as I like it on gold and EU, but it has potential just to follow the market. But yeah, Ray, if you want to share your screen, bro, if you want to go over some pairs, you know, I'll let you go over that GCAD and a few things that maybe were requested in the chat. I know some people want GU and USD CAD, if you take a look at any of those.
All right, got you. Cool. Just to give me a sec. So hopefully y'all can see my screen. But I did take a sell on GBP CAD right about 6163 area. And I'm taking this sell. It's just a shot, you know, and hopefully it does get that, because overall I believe that the market has a little bit lower to go. Now on the higher time, I do believe I can get a very large bounce from this area. Whether it'll go this far or not, is just to be determined. But overall, I see this market potentially, having a 500 pip or so rally, just due to the fact that, we are respecting demand, where the market, is, producing demand. We actually come down and respect it again. We tap right here, we come up, break these previous highs, and now we're coming back to revisit this demand. So what it is that I really see happening on the lower time frame is this market starting to go sideways, right? I'm not going to get all into the specific, labels and stuff, but, when it starts to consolidate a little bit, you can somewhat consider this a potential accumulation. Again, I'm not the wick off guy, so I'm not going to, go into all the specifics, but the way that I look at it is when I see the market trying to find a bottom, I look for a strong low to be formed. So with that being said, obviously the shaded area is a demand zone. So, we're creating a weak low here, another weak low. This is pretty much where the market opened. And now we're creating another somewhat of a weak low, which is why I do believe the market wants to push down and take the liquidity resting beneath this area, and then give me a very strong reaction that'll actually leave like some imbalance behind, leave an area for me to come back and retest. Because, when I'm trying to find a bottom, for example, if I don't see an area for the market to come back and retest, like over here, you don't really see those inefficiency areas. You don't really see those large bullish engulfings or those order blocks that you want to come take trades off of. I typically tell myself that we don't have that because this isn't the bottom yet. So when you have all of this choppy price action that's retraced, typically the market will come down, take it out again, and then potentially give you that big bullish push. So that's the reason that I am in shorts. I wouldn't necessarily take an entry now, but for the buy side of things, I would be looking at about 6124. We can get down to like 6124. I would be monitoring the way the market is reacting out of this low. And if we could react nicely out of this low, you can get a nice low risk, high reward type of opportunity. Obviously we could scale in on a lower time frame, but just based off of what I see right now, we can go in with a 25 pip stop or so, and again target our higher time frame targets. So our entry time frame and our target time frame are two different, time frames. So obviously this is a best case scenario. This is like a swing type scenario. Doesn't have to go that high, but that would just be pretty much where I close all profits if it was to go that high. And this does take patience, and it takes grit, willpower, just because, even on GU, I was in this trade, and this is like a 2-week long trade, and I closed it last week. Probably towards the middle or the beginning of the week last week, got in here, and I already knew that, these lower areas would be taken out, but it's just about that patience, being able to wait through consolidation, being able to, truly be patient. So that's why when it comes to a pair like GBP CAD, although it may take some time, it's really just about getting in a prime position and, seeing what we can do. Now, the reason why I am targeting these highs is because none of these highs look protected, in my opinion. If I look at this high, it looks suspect because of those weak candles, right? These highs are suspect because of the obvious reasons. These weak candles, this high is suspect. This high is suspect. Like, they're all suspect. So now I actually have a reason to go bullish because I have a lot of weak highs that I want to target. So it's not that I just want to go bullish because I'm in this area of demand, but I'm also have weak targets. So I always like to compare my lows to my highs, and I ask myself which side has more strength, like which side is more in control. So the fact that I do have these demand zones respecting each other, and demand is also sweeping liquidity on the lows right here, then now, then on top of that, I have highs that are not sweeping liquidity. Now I can tell myself, okay, the lows are protected, the highs are unprotected. So now we have more of a reason to target those highs. All right. So that's just what I see. Again, I would look for some long opportunities around 6124. See how the market reacts down there. And that could be something you get in at the beginning of the week, and you know, you can hold it all week, just start partialing out. All right. So that's that. I will take another quick look at a couple other pairs. I don't really see a lot because a lot of pairs made huge moves for last week. So something like GU, for example, not really a trade opportunity available. There's not really anything I can take a trade off of unless I'm analyzing on a lower time frame, but it's just not worth it there. You know, GU is pretty much my primary pair. The GBP CAD is more of like a secondary pair for me, but I do see a better opportunity here than I do on GU. So that's why I'm gonna put more of my focus on GU. All right. So that's that. GBP CAD. I will take a couple more looks at some different pairs because I know you guys were asking. And let me just check the chat real quick. I just want to make sure I don't forget anything. So just give me one sec, guys. So a lot of people are asking for a GJ. We could definitely take a look at that. I feel like GJ is more of Skaggs pair. I know I missed a phenomenal sell opportunity. Last week, yeah, I didn't do bad. I just missed out on a handful of trades. And, you know, this stuff is going to happen when you're trading. You know, other things have your attention. You know, I was dealing with some family stuff this past week. So it's just, you know, pretty much a slow week for me. I didn't really lose anything, but I didn't have any significant gains. But again, this was another one of those moves that just got away. So now we're in a position to where we're in no man's land. You know, if you want to sell at a premium and buy at a discount, you know, essentially we're pretty much like in the middle of no man's land right now, in terms of this market, whether it's bullish or not, or even if it's bearish. Meaning, if I did want to sell, I don't really see anywhere to sell from. And the same if I wanted to buy. Because so until this market, you know, really retraces a little steeper, we could possibly get a sell up here or maybe a little higher, or even on the buy side. You know, this market still has to produce a steep enough retracement if we were to look for buys. And, you know, and I'll give you a couple scenarios. Just because I don't see a trade on here at this second doesn't mean, you know, a trade won't present itself. So if I was to look for buys, I probably look in here, even though I don't like that candle. I probably take a small opportunity if the market wants to retrace back into this area. And even on the sell side of things, I don't believe that candle is very strong. So I would probably seek, you know, higher prices. The market is in this range. So the thing about these ranges, you want to sell and buy on the edges of them, you know, like up here, you know, it was a high point of the range. And even right here, this was a higher point of the range, and not necessarily the top, but it was at least a little bit higher. So as long as this market is trading, you know, pretty much in the middle of, you know, this range area, you don't want to really get caught taking positions here in the middle of that. You know, let's wait for it to, you know, pick a side, you know, maybe take a little bit of liquidity up here, and then you can have a reason to short. Or even if we take out some lows, maybe here or even here, you know, you can have a reason to buy. But at this moment, I don't see a reason to do anything on GJ. All right. So right now, it's looking like just GBP CAD for me. I'll take a quick glance at some of these Euro pairs just to see if anything stands out to me. Oh, excuse me. Sorry about that, yeah. If I had to take a trade on Euro AUD, you know, this was a demand zone that I was already targeting, and I wanted the demand zone to actually come and hit before this bullish rally. But we see this bullish rally actually happen first. So now what? because it seems like we missed out on the buy opportunity. Well, not necessarily. Not necessarily. These areas don't hit the moment you always think they will. Here, even though the market did give me this bullish reaction, okay, I could still look at these lows and tell myself there's still more liquidity resting underneath there. I could also come back to lows over here, then lows over here, and tell myself that, you know, again, there's still more liquidity that we can come and take, okay? So since there's more money to come and grab, what's the chances of, you know, this just being a retracement, okay? Then we fill in this area of imbalance here, and the market could very well potentially, you know, do this, and then we'll get that bullish move because we would have created a strong low here. So we have this weak low, obviously, we take it out, then we create a strong low. That would be a reason for me to go long, all right? So with Euro AUD, again, we have potential shorts. And I mean, the risk to reward is there because if this setup is legit, you know, it's going to go and take out this low. I'm not saying that every trade is going to work out. It's just you have to trade with the, you know, probabilistic attitude. So if I'm looking in terms of probabilities, you know, there is a chance that this high is protected. We acted off of demand. We got a strong high here, area of imbalance that created this inducement or internal range liquidity. So we did take out that liquidity pocket, and now we filled that area of empty liquidity, right? So now that that area is filled, now the market can let go of some of those buy orders that's in this candle, and hopefully maybe the sell orders can take over, right? And if the sell orders take over, now I want to target all of these weak lows, and this would be that internal range liquidity right here that we need to come fill, all right? So as we come down and fill this area, again, I could see the potential for some buys to step in. So if you want it, you could take it. I personally believe it's gonna drop. So you know, just take that information for what you will, okay? So I like that on your AUD potential sell to buy scenario. The buy I would look for 52265, and that's 52265. All right. So Euro USD don't really see much at this moment. I'll be patient there. All right. Same with Euro CAD, just consolidating a little more than GCAD. Obviously, you see this market is moving pretty sideways. You know, I probably could give y'all something here actually. We actually do take out these lows already. So, okay, so we do take out this low where this could be considered the bottom of our range, okay? This could also be considered, you know, the top of our range. So the market has just been ranging, okay? Now, if this market is still bullish, okay, there is a chance, can't really tell because the market is consolidating, but let's just, again, if the market is ranging, you want to trade on the edges of these ranges. So if the market is in this range and we want to take a bullish approach to it, it should probably be down here just due to the fact that, you know, we do take out some lows and then we push up. Before we break structure, we do hesitate off of supply. Then we break, make fresh highs. Now, this is my low. This is my swing high. Now, everything that happens in between these two areas is just, you know, counter trend structure. So with that, I also have a weak low here and a weak low here, but I know I have a strong low here. So I want to look for weak lows to get taken out, but also my strong low hold up. So I would look for something like that, okay? And, you know, that would make sense since I am looking to take longs on GBP CAD. So I would look for these lows to get taken out. And then once those get destroyed, we fill in a little more of this imbalance, all right? We take these lows out, and then we could potentially go long on GBP CAD, all right? So that is something that I see, or Euro CAD, excuse me. So that is something I can potentially see happen. That'd be like a nice 1 to 7.6, 1 to 8 type of trade, all right? So right now it's pretty much looking like GCAD and Euro CAD for me, all right? So that's all I have, guys. Let me check the chat, see if there's anything I'm missing.
I just threw a raise.
IG,
I threw it up on the screen for you. You don't gotta say it. It's up there.
Oh, okay, got you. Appreciate it, bro. So yeah, that's pretty much all I got though, man. Not really messing with the USDs this week. After last week is a lot of fireworks, so I want to let the market decide what it wants to do. But for right now, this is where I'm at with it. Again, week low. Let's go ahead, clear that low out and go long on GCAD, EuroCAD. Let's see if we can go a little bit lower. Okay, if we can get a little bit lower and get the liquidity that's underneath here, I'd be more than happy to buy that just off of the risk to reward. All right. So yeah, that's what it is I'm looking at, man. I don't know if y'all have any thoughts. I know you don't really trade these pairs, but you know, that's what I see happening though.
Yeah, no, those are some good thoughts. I think staying away from USD pairs is not a terrible decision, especially when you have other stuff on your watch list like this to trade. Unfortunately for me, that's just not my situation, so I'm I'm stuck trying to figure out what that wants to do. But yeah, no, a lot of these look good, bro. I definitely like them. Eric says your Euro CAD setup looks fire. I would probably agree with that. That looks like a nice. That's the one we got on screen right now. Yeah, that looks nice to me. That's also something that I would take based off of, again, just the logic of how I trade. The risk to reward on that is also beautiful. Drew said, how you hold trades for that long and cope emotionally, especially for pullback. So I'll give my answer, then Ray can go a little deeper as well. But for me, it's like, especially when I'm swing trading, right? Because if you don't know, right, I have a lot of trades open that are up a lot of pips, right? So I am floating, 1,000 pips plus on multiple different trades, and I mean like multiple different pairs. And for me, the way that I can achieve that, more or less, is going to be because I partial out, right? So if I'm trading a standard on something and I'm looking at it on a 4 hour, and I execute and we enter fresh 4 hour liquidity and I'm up 80, 90, 100 pips, I'll scale out of that position 20, 30% and I'll pay myself. And then I can hold the rest and I won't be as emotional when a pullback comes because I know I've already took money off the table. And really, I think this is like one of the only real logical answers besides, just having, full control of your emotions is, being able to just to pay yourself on specific situations. So again, it's like when you guys look in like my EU position, like my long-term entry, which we have to come on the daily chart for, it's like, yeah, my entries are down here, but I scaled some out over here. Now, like, do I regret that? Because yeah, I could have held that 20, 30% that I closed there and made a lot more. Sure. But when this pulled back nearly 70, 80% of my move, I wasn't concerned because I had already paid myself and I was good. I was chilling. I was okay with it. So that's kind of where I get to hold my position for the long term. And I'm pretty sure Ray would agree with me. Maybe he has additional things to add, but like when you pay yourself on a position, it becomes easier to handle, the potential for a break even or the potential for, it pulling back and you having to kind of be more patient with it. Especially when you know what you have, especially when you have higher targets and like you have logical reasons for it to continue. then yeah, that's normally what I do. So again, like you just got to scale some off. And if you're trading smaller accounts, this can be difficult, right? If you're trading 0.01s, 0.02s, this is, not something where you can close 20 to 30% of your position, because mathematically you just cannot do it. It will not allow you to close below a 0.01. So you can't close like 0.005. At least in most situations, there are certain trading apps and brokers you can use to actually do that, micro accounts and so on and so forth. But typically, if you're again trading with smaller lot sizes, it's difficult. So for again those of you guys that are on funded accounts that you can swing on, if you're on personal accounts where you're trading like 0.05s or 0.10s or higher, then you can actually kind of go in and like when you have a 0.10, when you get that first kind of like break of structure, that's when you close out that, 0.02, 0.03, and hold the remaining, 0.07, 0.08, for your higher term targets. So yeah, when you've already paid yourself, it's a lot easier to manage your emotions. Ray and Abel, do you guys have any additional thoughts on that maybe are not exactly what I said?
Um, yeah, also just detaching from it, man. Like it's a lot easier said than done just because, I was in the Nas buy at like 10.55 and I was holding it for a while. I held it for well over probably a month and a half or so, maybe a little longer. Let me see when I actually got in. Probably
I'm
close
pretty
to
I'm pretty
two.
sure you got in with me down here at like the 10.4 or something,
Yeah,
10.5,
yeah,
yeah.
yeah. I got in down there. But that first real push up is where I really took most of my profits at. And even when it started retracing, I actually got out. And it was a mistake on my part, obviously, because the market continued to go higher. But even more importantly than that, just holding yourself accountable for that long of a period of time. I'm gonna be honest, it's easier said than done. So obviously, it's a difference between knowing something and actually applying it. So a lot of these things that, even Skaggs is telling you, because he's a master at holding, it's going to take time before you get to that point, so paying yourself and all of that, but also detaching from the trade itself and, paying yourself a number where you're satisfied enough to let whatever happen. Because, for me, I don't know what I did. I talked myself out of it. It was like coming towards the end of the year, I believe. And I was just like, I'm good, it's waiting towards the end of the year. I just want to start a year fresh. But looking back on it, there was no real reason technically to get out of it outside of, me reverting back to old behavior. So, it's going to be a challenge. But again, if that's something you work on, you can, get in those position trades and just let them ride forever. So, I feel like you've given great advice on that, bro. And again, it's a lot easier said than done. So just focus on it every day. You guys will get better and better at it, and also see yourself trading for a while, man. Skaggs, Abel, myself, Kyle. We all are at the mindset of like we know we're going to be trading for the foreseeable future. Like whether it's the next 5, 10, 30 years, it doesn't really matter. So knowing that you're going to be in the markets, regardless a year from now, I can see how, you can look at these trades with a more of a long-term approach. So again, just detach from the outcome that'll help you guys, endure the time a lot more. So
Yeah, he also had a good follow-up question. So do you re-enter once you scale out or well on the pullbacks? So this this depends. On some of these positions, the answer is yes. On some of them, the answer is no. So you can see on NASDAQ here, I actually do have multiple positions. So did I scale out of NAS when we were at like these highs up here? Yes. Now, when I re-entered down here, I got to be honest, I went a little bit even more aggressive, mostly because I had more equity to play with. So this wasn't really me adding my risk as much as it was me just treating this as a new trade. Same thing with this position. This is like wasn't me really adding more to these because I had not scaled out more of these. It was just a new position for me. There are situations where I will remove risk. I will remove 30% with the anticipation of re-adding that 30% back. But again, this is not like a clear-cut rule that I always follow. I decide in the moment on whether or not I want to do that. You also, sometimes I'll do the math. It's like, okay, well, on this new setup, if I re-add my risk back, is this going to jeopardize my other positions? Am I going, if this loses, am I going to have to scale more off of my other positions? So like, you kind of have to reassess the entire situation at that point. So no, it's not like a clear-cut rule that I have to do that. But again, there are certain situations in which I will add on, like EU. I really haven't added on. I just bought it down here with my risk, and I scaled out, and I just never added it back, and I continued to hold. Like, I was okay with that. But there are certain positions, like gold, where I was in it from down here, and I didn't necessarily have the type of position that I wanted, so I bought more when it was over here. That wasn't really me adding risk back. Again, it's just a new trade. So, yeah, there's no, like, I don't have a clear-cut answer for you, because, again, I take this situation by situation, unfortunately. So, yeah, you really have to kind of just decide, on what you personally want to do. Unfortunately, this is, like, one of the things that I have in my trading plan that, it exists as something to do, but that doesn't mean I will always do it. Because I've had times where that doesn't work. It's like, you scale out, and then you try to add that risk back on a little bit of a pullback to get a better price, and then it ends up keep going against you, and then now you break even on your original position, plus you take that loss, and like, you just threw away your profits. So you really just have to decide, on what you want to do with that. On a really good position, something like this now, like on gold, like if I had taken risk out of this, I might look to add it back, like at this point, again, because this is a really nice pullback. So, yeah, unfortunately, I don't have a clear-cut answer for you, because it's not like a systematic thing that I do every single trade. Like me taking my partials, that's a systematic thing. That happens every single time, regardless. Whereas me adding it back I'd have to really be confident in the continuation. So, yet I don't, it's to each their own on that, but typically speaking, I don't. I would say that I don't more times than I do. So yeah, it's for me it's situational, but if I had to say like yes or no, I would probably say no based off of what I have in my trading journal of how many times I've actually done that. But let's actually take a look at indices, because I know a few people wanted us to take a look at these. So this is another thing that's kind of adding to my ideas on gold, the gold move on gold, and like the dollar move ultimately being fake. So just to kind of like clear some stuff up here, we have hit my targets. I've been talking about these targets for a long time at 12,800. You guys know I've continued to talk about this, and you've even seen me before. I just turned this into a check mark because we finally have taken this level, which is a beautiful thing. I do, however, remain bullish on these, and the reason being is if the dollar really had as much strength as it appears to have, I feel like you would have seen the reaction across the board, right? Indices, or NAS specifically anyway, because we'll go take a look at US30 and SPX. I have a feeling they're a little different. Didn't really catch much of a retracement. Yeah, it moved up, and then it kind of erased that move, but like we're really not any lower than we were already last week. So again, it's like, is this dollar strength true? Because if it is, indices should theoretically, with that money and order flow and all the correlation, should have probably came and filled some of this imbalance. And same thing, so to speak, with crypto, although I think crypto caught up over the weekend. We'll try. Like, right, I say that this really didn't break out of the range. I really didn't see any, like, actual dollar strength here. And this is why I do think that, again, some of these pairs are just straight up either lying or more volatile than they deserve to be. So I do lean continuously bullish on these, and I've actually exited that position, so I'm just going to take that off my chart. I still do continue to look for the next logical area for price to come to, which is going to be above this. I don't know why this keeps putting my lines in the wrong spot, but looking at like 13.5 on NASDAQ. Now, obviously, we may not just immediately come right up here. We might need a little bit of a pullback in order to achieve this. But yeah, I will continue to look at 13.5, which on the weekly is, just above this candle. On the daily, that's where we're kind of sitting with that you know, a little liquidity block or continuation block, whichever term you want to use for it. Again, filling out some of the inefficiencies that still live up here. So yeah, I still remain bullish on these, specifically NASDAQ, because I don't trade US30 or SPX. I like to focus on just one indice because, again, they do like to be a little temperamental with their correlation sometimes, and US30 likes to be, you know, the annoying one more times than not. If I was going to look at some sort of setup on this week, again, I would still expect us to kind of continue down and play with below this range. So I'd probably start to investigate, you know, if there's any candles here I specifically would want to play. This candle sticks out to me. So I'd probably look at taking buys underneath this, right? Because I want to get as discounted as I could possibly get. So I would be looking a little bit below this. See if I can't, hold on, let me just get rid of this. Because for some reason I can't click on my other stuff. Okay. Let's go back down to 15 minutes. So yeah, I would be looking for us to continue from this area. Again, my stop loss will be dependent on what the action actually looks like down here, but I probably wouldn't be risking any more than this. Because again, I'm not going to flirt with the inefficiency down there. I don't want to be getting stuck holding if we do want to correct through that. But I would be looking at like a continuation like this this week on the NASDAQ. Now let's go just take a quick look at US30, and then we'll see if Abel has anything on these, because I know he's been watching these as well. And again, you know, the reaction here is the same thing. There's not really too much selling that happened. Obviously, we're kind of getting squeezed here, and more than likely this is going to squeeze to the downside. Interesting enough, I probably would want to see this wick fill. That's probably more than I'd want to see than on NASDAQ. Let me just see if there's anything on the lower time frames here. Yeah, this wick, unfortunately for US30, I'm probably not going to want to touch this unless we fill out this wick. So let all these people that are trapped inside of, or not trapped, but maybe even buying inside of this wick, let all these people kind of get liquidated first. And I'd probably be looking to play with the pocket of money that sits here. If I really wanted to get like very specific with the entry, like if I was going to take it on the wick fills, I'm probably going to want both wicks to fill, and I'll probably just end up grabbing it like right here and seeing if I can't run a stop maybe below like a candle like this. Again, well, actually that's the same area, huh? Ooh, that's annoying. Yeah, I'd probably just keep my stop something like this. Because again, I would be looking at the continuations. The thing is, though, on Sunday, it's hard to give you guys an actual stop level. Because as you guys know, I want to see the actual reaction from here. I'm not going to just immediately push the button. I don't care about getting the picture perfect entry. I care about what the reaction is off this level. And then once we get the reaction, then I can play with tighter stops and so on and so forth. I always base my stops off live action in the areas that I'm playing, and not some just like fallacy level over here. Now, if I was going to give this an invalidation level, I'd obviously have to run this, you know, below the structure here, and that stop loss is just not going to be entertaining enough for me. It's just not appealing. So I'm not going to entertain that kind of like nonsense stop. So realistically, my stop would probably be like something more or less like that, dependent on the action. But then again, I would be looking at this continuing to the upside. You know, again, filling out some of this old structure over here. And again, continuing this kind of bullish order flow we've been in. Again, I'm surprised these things did not react the same way that gold did, that EU did, that GU did. Because money flow and correlation dictates it probably should have. Let me just get rid of these little hourglasses that no longer matter down here. So yeah, that's what I would be looking at. I'm going to look at this specific area here to see if I can get back in, or this is where I would look for buys if I traded US30, which again, I do not. So that's what I will be looking at over there. Drew said that's extremely useful. No problem, my guy. Yeah, so that's what I would be looking at over there. Let's just take a look at the same thing on SPX real quick. And then, Abel, bro, if you have any thoughts or want to share your screen on these indices, bro, I'd love to actually also hear what you're looking at. But this is a lot like NASDAQ. I'll probably just end up playing the same, probably the same little stupid stutter candles that live down here, yeah. So I'll probably look below this on SPX. again, this is going to get squeezed to the downside for sure. I would be surprised if it doesn't anyway. So looking at buys below this candle, which is more or less at the 4100 area, with, you know, a stop that's probably going to look something like that. And then, you know, again, resuming that bullish momentum into, again, the same areas up above here. All right, the same exact structure, same exact everything on SPX. But yeah, that's what I see on that, family. It's going to be pretty simple, pretty basic. Again, just looking at continuations here. I don't have any reason for me to particularly jump into any sort of short side idea, personally speaking. Abel, do you have any thoughts on indices, or are you taking these off your list for the week? What are you looking at with these?
For indices, I'm definitely not touching it to at least start the week. I don't want to touch it with a 10-foot pole, like at all. All right, so I'm gonna stay out of the markets in terms of indices. But I am currently looking at a couple potential setups here. Looking at USD JPY and potentially even USD CAD. I don't know. I think that the location and where these currencies are actually located is what makes it makes it very interesting to me. So let me go ahead and just break down this USD CAD really quickly. So overall, guys, overall this thing has been obviously, you know, making its way bullish, but recently over the past 4 or 5 months we have been in more so this extremely choppy corrective market here for USD CAD, where we've been in this range literally since September, just going very sideways. And it's gonna be tough to try to break out of this range, but there is still opportunities that we could take advantage of. So one opportunity that I'm looking at here, guys, is just for this thing to potentially seek for another low, right? I would love to be able to see USD CAD itself go ahead and make, you know, something like this, right? Possibly even from the areas that we're at, you know, just go ahead and make its way lower, just to continue in this little more so this bearish order flow that we've been experiencing recently. And realistically, I want to see it come and take out these lows at 1.32. All right, like I would love to see USD CAD eventually make its way down to the 1.32 level. And then when we get into that area, then obviously we could possibly look for, you know, some fading back to the upside to possibly capture some liquidity that might be left behind. But overall, guys, I'm definitely leaning towards a potential continuation to the downside here, especially where we're currently at. If we just look at price, look at what USD CAD has been doing overall, I mean, keep it very simple, right? We've seen a very aggressive sell-off, right? The market started just to build up some liquidity. We ended up spiking back above it real quick just to capture all of this buy-side liquidity before we eventually ended up creating a new low. Similar concept, you know, we ended up creating this range again. You know, the market went against the overall top of the range, captured some more buy-side liquidity before we ended up continuing back to the downside. So it's been doing these patterns, guys, consistently for the past few weeks now for USD CAD. And I think that there's a good chance that it could potentially continue. All right. So I'm actually going to be looking for, you know, this market, which again, you know, we built up this range right here. You know, market is just accumulating orders. We end up spiking out to the upside due to news. All right. And now I think there could be a good chance for this thing to actually go ahead and start to make its way, you know, back to the downside, right? Especially when you compare the reactions, right? When you compare the reactions from the lows and you compare how the market reacted every time we created a high, like we've seen very aggressive selling off, right? Where these lows itself, guys, like there's really not too much momentum at all behind these lows whatsoever, right? So that makes these lows be, you know, super targetable, right? I think that these lows are not going to really hold too well. And that's why I would like to go ahead and go and look for these shorting opportunities, right? Just sticking with what the momentum has been showing. Now, again, I do eventually think that we will probably spike up because I think we do still have a lot of potential liquidity above this 1.35 level. But I don't think we're going to go ahead and target that just yet. I believe we still have just too much sell side liquidity that we have to go ahead and grab first. You know, so yeah, you know, maybe around this 1.32 level, we might be able to look for some more buys. But until then, you know, I'm definitely looking at more so the opportunity to short USD CAD, right? So if you did want to go ahead and look at this market, we can go to lower time frame, right? 15-minute time frame. You know, we did actually see the market come back up, you know, spike above this little hesitation right here, this little pause in the market. All right, we started to spike up, and now we're starting to see some reaction, some rejection. So this is a very interesting area for me. I would have wished for the reactions to have been a lot more aggressive, to give me a lot more confidence. But the market still could very well, play off of this level right now. Again, if you did think about taking something like this, family, I always want to be safe. Yes, you could try to run your stops above the equal high or above these highs, but I don't think those highs really, I'm not too confident about these highs, right? Because there's still a chance for the market to even go ahead and, spike up one more time, right? Maybe feel a little bit more of this imbalance to the left that we have here, all right, before we go ahead and see a major move. So if you do take something like this from right here, then you are going to have to run, somewhat of a wider stop loss just to protect yourself more than anything. So that's one thing. Another thing that, again, it is a possibility, right? If we do actually spike up, then that's necessarily not a bad thing. I would actually be excited if I seen something like that, because then it'll allow me to actually go ahead and start fine tuning my entry, right? Go ahead and really be a lot more precise where with the entry itself, and give a much better risk to reward overall. So even if we did see the market spike up into these levels at 1.344, that would be best case scenario. Realistically, I would love for that to happen. I'll be excited if that happened, but the market doesn't necessarily have to do that, and it could also very well just start making this move from right there. All right, so how you guys end up playing this is totally up to you guys. For me personally, I'm probably going to just be a little bit patient, right, and see if we can get this little spike up to this 1.344 level. And if we're able to see that 1.344 over here get filled, then I would like to go ahead and start to target back down to the downside. Which this opportunity, guys, looks really good. We're talking about, a 6-to-1 risk reward, right? So we're going to be risking 6 times, or we're going to be targeting 6 times our risk on this specific trade idea, risking 30 pips to go for almost 180. And I like it. I think it looks pretty juicy, and obviously that's if we continue to stay in the path that we've pretty much been going in, right? So that's USD CAD for one. USD JPY is very similar as well. Let me give you guys just a quick bigger outlook of what I'm looking here for USD JPY. All right, so we did get a nice little strong reaction out of these last little demand zones that we had down here. But even then, overall, this market still has been very, very bearish. All right, very, very bearish, right? And I do, again, just like USD CAD, I do eventually think that the dollar is going to bring some strength. All right, I do think that. But overall, this thing is just looking so prime and so juicy for us to continue much lower. All right, at least start to correct a lot of this strength that we did experience at the, all last week, right? Because last week was a very aggressive week for the dollar. I think now could be the time that we start to correct some of that going into this week. So even looking at USD JPY, guys, where we're currently at, it's not too bad, right? We're at the high of this current range right here that's really controlling the market. We retested it, even though it did happen over a gap itself, right? We did come up into this level. We are retesting previous levels of structure. We did actually get into this liquidity pocket as well that I'm very interested in. So even something like this, guys, looks also very, very, very attractive in my opinion, right? So again, bigger outlook picture for you guys really, really quickly. Again, I'm not saying that this is going to continue to break these lows. It is always possible to do that, but I think that these lows are actually pretty strong in my opinion. So I wouldn't even target all the way down to those lows. I'll probably just target right back to around the 129 levels. Now we got to see if it even makes sense risk to reward rise, right? Because again, if we are going to take it from right here currently, guys, right, our stop loss, the safest position, all right? Now, again, it's not saying it's where you got to put it, but the safest position, just taking it from looking at it at this perspective, would be to be at the top of the range. Right. So that's just keep that in mind, right? We'll have to be at the top of the range if you did do that. So if we were to take this trade just like this, right? This is around a 3-to-1 risk reward, which is still not bad. As long as it's a 2-to-1 risk reward, I'm very comfortable taking it. But more times than not, I definitely recommend maybe like 4-to-1s, 5-to-1s, 6-to-1s, obviously a lot better. But this is still not a bad bet. Now we just got to be a little bit patient and see what the market gives us over here on these smaller time frames. Right, see if it can give us, some type of a confirmation in these markets for us to go ahead and get involved, right? Like maybe if we go ahead and we see the market come back up, you see how we opened up for the week all the way up here at these highs, and we never really came back to fully retest it just yet. maybe if we do see a nice little spike above these levels, guys, overnight, and then we see the market come back into it, that can be, a good opportunity to go ahead and get involved. All right. But again, if you do wait for it, then obviously your stop loss would be a lot smaller. Your risk reward would be a lot better if you were to wait for something like that. Right. So that, again, that's if you want to say wait for more so to see if the market could come back and at least retest the open of the week. All right. And then give us an opportunity to get involved. If you have the patience to do that, obviously your risk reward will be a lot better. Your stop loss will be a lot smaller and things like that, guys. Right. But I am definitely targeting, or at least leaning towards, bearishness to come in for USD CAD and USD JPY. So that's probably what I'm going to be targeting going into tonight. Seeing what happens throughout London session and then waking up in the morning for New York session and seeing what happens. For sure. But those are the ones that I'm probably going to be more so playing to start this week overall, right? But that's pretty much what I got.
So quick question for you, bro. So are these shorter term moves before you continue that dollar long bias? Like is that like is the target that you have in your chart is like that what you're looking at? So then you can continue buying, because I know you were a little bit more bullish on the DXY. So I just wanted to.
Yeah, that's exactly what it is. Obviously for USD CAD, it's definitely going to be like that. I would love to go ahead and look to some more buys on USD CAD. But I would personally like to buy USD CAD down here near this 1.323. All right. So it's definitely probably a little bit lower than where, if I look at the dollar index, even the dollar, right? I would love to start buying the dollar below here. All right. Like below this 1 or 1.5.
I just wanted to make sure that you were, that I was imagining what I thought you were imagining. And that's like the same thing. If the dollar is going to get some strength, that's exactly what I want to see too. So I just wanted to make sure we were definitely in alignment and I wasn't just imagining things.
No, for sure. Yeah, because long term, I still do think, I love how this weekly ended up closing. I'm not even gonna lie. Like if you guys been following, you guys know my favorite candlestick patterns, right? It's like these type of patterns right here. And this is a weekly pattern too. It's like this is not just no regular engulfing, right? At one point, this was a very bearish candle, all right, that ended up spiking below, grabbed liquidity, and we ended up engulfing previous 2 weeks. So those type of candlesticks just hold a lot of weight for me, right? So just seeing where we're at, seeing how we reacted below these lows, that just tells me that dollar strength is eventually going to continue. But I would love to see, and it's something that we speak about as well, where in terms of how candlesticks form. Like I would love to see this thing to come down to start the week off. Like that would be honestly beneficial for us so that we can get that lower wick to come in. And then eventually a nice strong push up to end the week will be what I would be looking for overall. So yeah, that's my opinion. That's my biases, guys. Again, I'm going to be looking for USD cash shorts, USD JPY shorts to start the week. And then depending on how the week goes, hopefully at the end of the week, I'll personally be looking for long-term buys. If obviously, everything stays the way I'm looking at it now. But that's what I got personally. Let's see if anybody got anything in the chat.
I like that, bro. I can vouch for that analysis. That's what I would like to see.
Dope. Love getting confirmation from the boys.
Abel, Eric wants to know if you're still looking at GJ buying.
GJ buy. So GJ's is very, very interesting, right? So let's go take a look at GJ real quick because this thing really has been just stuck inside of a range for the past couple months now. And this thing has just been building up liquidity on both sides, right? Like realistically, this could realistically go either direction. Like 100% can go either direction. Because even if we go back to the bigger perspective, like this thing really hasn't done much. Like ever since, it's been almost an entire year and we just been stuck inside of this range. So if now I'm to a point where if I'm going to play GJ, it's got to be at the extremes, where I got to play something either off of here or even off of here, right? Because it's tough for me to want to play in the middle of this range where we're currently at. But to answer your question, right, if we are able to see price come down and grab these lows first, if we grab these lows first and we immediately rebound in 100%, I'm going to be targeting all the way back to the upside, right? At the very least, back up to 166 level. So that's just my opinion. If we do take out this low first before the highs, then I think we're going to have a lot of space to go to the upside.
Please no.
Shoot, that's please yes.
I need one. I would rather come up to your buy side. I mean, again, we've been waiting on it for a while, family. We want that 162.40 and then drop. But I agree. If it does take the bottom side first, I'm gonna have to adjust probably.
Yeah,
I'm
yeah.
remaining patient on this one personally, though, too, family, because it is in the middle of the range. This is not where any of us would ideally want to play.
Nah, this is tough.
But we've been waiting on that wick fill where you got that buy side liquidity. I know, the Erics have been waiting on it too. So we're gonna again. That's my opinion. Is like I'm remaining patient to see if we can get that 162.40, and then I'm probably gonna go pretty savage to the downside. To be honest. Last week was annoying because again we wanted it last week and it didn't give it to us, and she really tested our patience. But regardless of what happens, whether it's the buy side or the sell side, we'll make these adjustments. But yeah, I definitely agree with that. I probably wouldn't touch this personally this week though.
Yeah, it's tough. It's tough trying to play in the middle of these ranges. It really is, because this thing could realistically go either way. Like, I was actually considering a shorting opportunity when the market, well, not when the market opened up, but I was watching it and I seen how the market just filled this wick, and then we started to get this little bit of a reaction. And I was thinking about entertaining maybe a possible short just to get below 158.5, because that's around 40, 50 pips. But even then, like, I'm good on trading in the middle of this range like this.
Yeah, that would have been a nice setup though. I seen that on your chart when you first put it up. That's definitely something I would have taken too. Because not only do you have that wick fill, but you also have the one that the news wick fill too. So it's like, supply was obviously gonna come in, and then you got the live OB that formed on the 30 mil. Like there's a lot of reasons to maybe try to hop in. I would say probably though the spread was probably terrible at that exact moment because that is like right at the opens. So realistically, even if you did sell at that point, you'd probably still be like negative or something, or just barely in profit. But
yeah, it would have been tough.
yeah, it's unfortunately we're not the bank, so we can't get the nice entry.
Yeah, it would have been tough.
But I still remain. I still listen, family. I still have my faith in the Bank of Japan and the pivots I've been talking about for, which is probably going to be almost about a year by the time it actually happens. But no, this it's an interesting pair for sure. She has been kind of stuck, but I will personally lean to redistribution. Come fill that wick down there at 148, 150.
And I would lean towards more so accumulation.
Yeah, I would. Yeah, that's where we do. Yeah, we disagree what's gonna happen after it breaks below, but that's okay. We've been disagreeing on GJ for what's probably now like 7 months, so that's okay. There's nothing new to the stream. They know. They know you're bullish. I'm bearish. It's
Crazy
all
thing
good.
is, yeah, I was calling the buys all throughout here. And even up here, I was calling buys, and then that's when you were like, no, no, no,
Yeah, no,
no.
those I'm telling you, that is a long-term high on GJ. I mean, at least until 150 is taken. That like those highs are not gonna break until 150 is taken, and if they do, well, then I'll have to revisit the drawing board. But
I
yeah,
don't know.
I'm still short from 169, so I can't have it come back to 168. Because
Yeah,
I've
I
been
could.
holding this and paying swap on it for so long. It's just like, yeah, I can't afford that. Well, it wouldn't really be that detrimental, but it would be annoying. Is like the appropriate word.
Yeah, nah, it's tough for me to want to sell GJ. Not even gonna lie, it is tough. I'm definitely more so a bull for sure. I just gotta wait for the right things to show itself though in these ranges. So we shall see what happens with that though. Let's see. Waiting for the wick fill, but hopefully it doesn't take the lows first. Shit, listen, I hope it takes the lows first. That's me
I mean,
personally.
Eric, like, listen, bro. I mean, I wouldn't be opposed to it taking the lows first, because if it does take the lows, that might be like our sign of weakness. So we might actually want that, because if we can get a sign of weakness and then come back and get the wick fill, like both, like it's still logical for both, because technically this range doesn't have a sign of weakness yet. So if we can get like that phase B sign of weakness and then come back for that wick, that wouldn't sway me out of my idea of 162.40, because what happens at 162.40 is going to be our confirmation or not, right? Anything else that happens at the lows or the middle of the range, we don't really care about. So I wouldn't be opposed to it taking the lows first, as long as it has some nice sell volume to give us a sign of weakness. So yeah, don't let that scare you out of the main idea. What it really is going to matter is, though, is like how much buying effort is associated inside of the range after that sign of weakness. As long as the buying effort remains low and we get a nice push of sell volume, we'll still be good, bro. So don't don't let it scare you too much. We might actually low key kind of need it in terms of what we're looking for. But it's just that if that happens, we're gonna be sitting on our hands for a long time and probably have to take the buys. Like at that point, we'll probably have to take the buys with Abel, just so we're not sitting here, hating life because we gotta wait what's probably gonna be like 3, 4, 5, 6 weeks for it to make its full
Hey,
completion
man,
of the move.
this is a 700 pip range.
Yeah, so I'm
So
saying there's lots of opportunity on both sides. Like I'm not gonna not take the buy because it's like Abel said, 700 pips. Like we could find a sub 30 pip risk, to take advantage of a nice 1 to 10, 1 to 20 still in there.
Let's see. Wally brings up a good point. The Bank of England becoming dovish. Bank of Japan hasn't even started to be hawkish yet. And this is a thing too that, again, where I think I'm not that sold yet on the Bank of Japan, right? Actually changing course, which obviously Skaggs is fully sold on them doing it. I'm not fully sold at all. Is because what is to say that they do go hawkish? Like there's nothing saying that they're actually gonna become hawkish whatsoever. All right. Like they have said it numerous times that they are going to remain negative. They're gonna continue to ease, they're gonna continue to print, they're gonna continue to do all these things. And even though they've had jumps in their CPI, they've had jumps in their inflation, they had jumps in a couple different factors, they're still coming out with confidence saying, listen, we're not doing nothing like at all. Like, I don't know why everybody keeps on trying to pressure us. Like, we're fine. We're not doing anything. Obviously, they say that and then they try to intervene in the markets to try to prop up their currency. But there's no say that they even do become hawkish. Like, nobody knows if they're actually going to go ahead and start to raise rates. Like, nobody knows it. Based off everything that we've been seeing so far, they're pretty confident in the fact that they're going to keep on keeping interest rates extremely low, negative at that. And I don't know, that's why I'm still a little more so on the buy side, because there's no evidence yet. There's literally nothing at all saying that they're going to start to raise rates. So I get it. There's people definitely waiting for them to become hawkish. I don't know. I think y'all might be waiting for a while for them to become hawkish.
I mean, you're right. I am in. Again, I'm dealing in a really shady gray area. Like, cause again, they can say that all they want. You guys know my opinion. I just think they're dirty little liars. I think that they're what they say in public and what they say behind closed doors probably not the same. They're hoping they could weather the storm without having to increase rates. And again, I applaud them for trying. I do. But again, logically speaking, again, regardless of what they say, if that inflation number keeps going up, it will continue to add pressure. And the more that pressure builds up, the more likely it is to crack and break. So, again, like he's right, guys. Don't mistake me for saying like he's wrong, because he's right, absolutely right. The Bank of Japan has done everything that they possibly can do to say that they will keep rates negative. They even think that their inflation is going to return back to 2% by the middle of this year.
Yeah.
That's what they think. But every CPI release, it creeps higher and higher and higher and higher. And if you guys remember, the Fed said the same thing. Inflation is transitory. It's not an issue. They damn well knew it was an issue, though. So, again, what they say and what they'll do in the future don't always align. So, again, I understand the shady gray area that I play inside of with the rumors. But it is also based in a certain degree of logic. Now, I will say if the CPI numbers start to change and they do start to dip down and they go like back into the 3% range, then I will probably throw away the bias. But until their CPI readings start to turn around, then I could care less what they say. Because again, I firmly just believe they're either one trying to ignore the issue or just straight lying about it.
Bro, it's again, hilarious. It's hilarious how you say how you say that the Bank of Japan is completely lying and to throw away everything that they're saying.
Yeah,
Like
I
what?
mean,
Like
listen, bro. It's not uncommon for them to do this. Again, like it's like the Fed, bro. The Fed said inflation was transitory. There's no way you honestly they honestly believed that. That's just what they said because again, they can't spook the market, and like they're trying their best to not spook the market and say that things are under control. But it's like the data suggests that it's not under control. So like it's gonna get to a point where they can't whether it's actual lying or not. That's how I say it. That doesn't actually mean maybe they are just ignorant or they refuse to accept it. Who knows? That could be the case. They could just worst case scenario they just continue to ignore the issue and they keep rates negative and inflation just keeps running. And they enter like a state of hyperinflation. They just completely trash their currency. That's a possibility. They just ignore the issue, refuse to accept it, and never do anything about it. Like that's I'm betting on the fact that they're not going to do that. That they're going to want to eventually do something that doesn't throw their currency like literally into the trash. But if that's what they want to do, that's what they'll do. But yeah, as long as CPI keeps coming out higher for them, I will continue to bet, and I think a lot of the smarter money will also continue to bet, because it's like they keep saying this, and they say it, and they say it, and they say it, but even price action doesn't dictate it. Like I don't even think the institutions believe them. I don't even, to be honest.
I don't think smart.
I'm either going to
money-
be very publicly right, and that will solidify how amazing I am, or I'll be very publicly wrong, and I'm okay with both. So
Yeah, I don't think smart money is leaning that way at all, to be honest with you. Because again,
I don't know, bro.
Just compare the central banks, bro. Like compare the central banks, compare where each central bank's inflation is at CPI. There's reasons why the Bank of Japan is moving the way that they're moving. Like it's
yeah,
not
because
that it's
theirs is still
unwarranted.
lower than ours.
Theirs is way lower. Like
Yeah,
not just
I get
lower,
it.
it's way lower than everybody else's, every other central bank. Like it's
But
way
how
lower.
long is that going to remain true as ours comes down and theirs continues up? Eventually, it's going to hit an inflection point where that's no longer true.
I mean, who's to say that theirs don't start turning around next reading?
Well, that's what I'm saying. And until it does, then
But
I mean,
even
that's what I
then-
said. Like, if it does start turning around and starts going under 3%, I'll throw away the idea completely.
But
Like,
even
okay,
then,
cool.
bro, like you're trying to compare a 4% inflation, which again, technically that is high for them, but it's nowhere near close. Where I mean, again, shout out to Wally, he's bringing in great points. Where the Bank of England is still dealing with 10%, right? The ECB is dealing with 9%. The US is still dealing with 6-7% inflation. So like, yeah, it might be high for them, but when you compare it against other central banks, like they're not dealing with as much at all compared to us. So
Yeah, I agree with you. I don't deny it. I just again I think and I believe that again there's gonna be a point where their inflation, as long as their inflation continues going up and ours continues coming down, it will eventually alter. And this is what I talked about too. Like I told you guys months ago, this is when the Fed begins to lean off of increasing rates is precisely around the time frame where you should see the Bank of Japan begin to consider raising. I said they're never going to do this. They're not going to do it at the same time, but you can't deny, like when I first started talking about this, guys, Japan's inflation was at like 1.7, 1.9%. It's now at 4.3 and still climbing. So it's not, yes, it's lower, but we can't deny that it's like quite literally doubled over this time frame too. So it may not be aggressive, it may not be as quick, and it may not be as high, but again, over the course of 3, 6, 9 months, a year, however long it takes, and will eventually, I believe anyway, it'll hit that inflection point. And again, remember too, the Federal Reserve, or at least the bureau that does the CPI. Remember, family, they've adjusted the way they do CPI as well. So that also may play a factor in some of our future numbers. They no longer base it off of 2 years of data. Now they only base it off of 1 year of data. So again, there's a little bit, to each their own. Like I don't disagree with anything you're saying, because again, it's all based in facts. But I also see the shifts happening. It's like you can't deny, like, okay, yeah, it is lower than other central banks. And like to bring up a great point, like the BOE inflation is still above 10%, which is crazy. The ECB is still dealing with 9%. That's crazy. I get that. But the Fed inflation is getting close. Like you're probably like maybe 3 readings away from Japan and the US having damn near the same inflation rate. And once that happens, I'm telling you, We should see a shift in tone. Will we?
Mhm.
I don't know. If I'm wrong, I'm wrong. Listen, you guys can hang me for it if you want, but
Mhm.
I,
No,
I
I mean,
you know
again,
me. I'm stubborn.
bro, you
I'm gonna stay
definitely
so firm to my bias.
I mean, you definitely make a lot of valid points, as well. And that's why I love these conversations. Just because again, it really is like there's valid points on both sides of the aisle. It's just a matter of really just seeing what the hell market ends up doing. But bringing it back to the Bank of Japan, or not the Bank, but the GBP JPY, that's why I'm still so bullish GBP JPY long term is because I mean the Bank of England is still above 10%, which is insane. Like that in itself should continue to bring some type of value to the currency as opposed to the Bank of Japan. Yes, I don't know. That's why for me, I'm definitely a little bit more torn. That's why I haven't even really been trading GJ as much lately. For one, it's just been too choppy for my liking. And for two, I've been torn on what the hell I believe is truly going to happen, right? Because for those of you guys that are new to the Streams family, like, and for those of you guys that are new to my style of trading, like I really do rely on fundamentals a lot, right? I rely on sentiment a lot. So if my sentiment of a pair is I'm not confident in it, then I just avoid that pair. You know what I'm saying? Because I want to make sure that my technicals aligns with what I believe fundamentally and what I believe sentimentally more than anything, right? And if it doesn't align, then I just avoid it, right? That's why I haven't been trading GJ. But yeah,
Yeah, that's fair enough. But listen, I mean, I love these discussions, and I feel like we've been having the same debate for like literally months. Um, but yeah, well, we'll see what they do. Again, if they want to trash their currency, I'm in no position of power to stop them.
yeah, all right. It's just tough.
Tyson wants to know if we checked out the JPY basket. Yeah, I mean, you can do stuff like that. Like there's like the JPY or the JXY or whatever it is. Like yeah, go to like JXY or J. Yeah.
Yes.
I mean, this is like I don't typically like to look at this stuff,
Snake
but this would
scam,
be
bro.
like the DXY version
Yeah,
of.
this
Yeah,
has
you could
been
also, in case you guys didn't know, like we have the DXY. This exists for other currencies. You could look at the EXY, the GXY. They have like baskets for everything. Unfortunately, these baskets you'd have to look into like what's actually weight in them, to know what like it correlates with the best. But yeah, typically I don't look at this stuff personally.
stay woke. This looks this looks like if we spike above here, we might go bearish. I don't know. I don't know. I haven't been trading yen pair, so I really don't even care what happens with this. I mean, just to add on to that too. Another thing that could possibly happen, right? Because obviously the U.S. the Fed has been on a good trajectory so far. Um, the lower CPI readings that we continue to see over here for the Fed is definitely going to bring some strength to the yen by default. Just because it's going to bring a lot of optimism back into the markets, the equity markets. And whenever there's a lot of optimism and hope in the markets, people tend to, liquidate their dollar, right? There's not as much of a demand for the US dollar as a whole. So that could short term, or not even just short term, but that could bring some strength for, the other pairs that are against the dollar, which obviously, the JPY is one of them. So that's another thing that could bring, the yen itself some type of strength. Could be just the fact, like what you mentioned, the CPI over here in the US is just getting so good that, investors' fears are gone, right? Investors' optimism are here now, where now they're more so they're comfortable going ahead and getting back into more riskier assets.
Yeah, that's a good point, especially when you consider, I mean, if the Bank of England and the ECB can never get a handle on their inflation, again, same idea. If things are getting better over there and you lean off the currency, again, people are gonna flock to not really flock to the yen specifically, but since they'll be leaving the pound again because of money flow, some of
Yeah,
that will flow into the yen. So it's technically speaking, you don't even really need the yen or the Bank of Japan to really like make a pivot. But
that's a
if they
fact.
do, but the difference is like if they do make a pivot, the moves will be a lot smoother, cleaner, and more intense. Whereas like if the yen is kind of still weak, and then like the other stuff is getting weak, then you kind of just get like really choppy ranges and stuff like that.
Yeah, I agree.
But yeah, that's a good point too, bro. Definitely worth bringing up.
Yeah, I mean, there's a lot of different things that could play out, family. That's going to influence these markets, man. A lot of things. Let's see. Sweep of the lows, potential SOW, sign of weakness, 700 pips upside, and BOJ steps in. Sounds like good stuff. It could happen, you Ali. It really could happen, man. You never know. As long as other countries continue to grow and develop, their share of global economic activity is increasing, which may lead to a shift away from the US dollar as the dominant currency, right? Geopolitical tensions such as trade wars or sanctions can also have an impact. You're definitely right, Jay. But just keep in mind, all right, whenever there is a lot of tension and fear, the safest thing for investors to typically do is to go to the dollar. All right. Now, as tensions continue to grow, and as we continue to have uh, a much better economy or a much better situation over here in the U.S., then yeah, I could definitely see, obviously a lot of people leaving the dollar just because of the fact that we're trending towards the right direction in terms of how our economy is going to go. I could see that, right? But as long as we are dealing with everything that we've been dealing with, I mean, like we cannot ignore the fact that we really might go to war with China soon. Like we can't ignore stuff like
Yeah,
that,
Michael
right?
just
Like,
brought that up, the China-Taiwan issue,
yeah,
which is like my biggest fear as well. Because I don't know if you, for those of you that follow me on Instagram, I did say that China-Taiwan timeline is probably within 90 days.
yeah,
I
it's
mean,
speeding up.
if that balloon was really here to quote unquote spy on us and like was actually collecting data, then it's more or less because China is not going to make a move against us, but they're going to make a move against Taiwan, and they know that we will retaliate. Well, because
Yeah,
we've said we will, and NATO will as well. So
100%.
that is a massive concern if China wants to do that. So that's keep that in the back of your heads, but don't specifically, execute with that strictly in mind, because that those are developments that will happen over time.
Mhm.
And you'll see smaller things that China will do, like they'll start moving ships and planes, and they'll start playing with like territories and in ways that are not just balloons. But yeah, like the whole China invasion of Taiwan is something we're looking at for mid 2023. This is not something I would wish upon anybody or even want to happen, but it is something that I've been talking about, and I do expect China to push some limits there, because again, Russia continues to get away with stuff, even though we send tanks and send a bunch of money to Ukraine and stuff. Russia is just getting away with things, and China will look to potentially step into that. So.
Mhm. 100%. I mean, I've been saying that too. I said it damn near probably a year ago. I was like, yo, like this whole situation with China and Taiwan is starting to ramp up.
Yeah, I think
Back,
you and I talked about it in October-ish was when we were really, because October is also when they had that whole thing where like they removed that guy from like their meeting very publicly. And well, again, people what don't know is like that guy was very much against us being like light on Taiwan. So it's like they've removed people from power that are kind of against the invasion of Taiwan, which again leads you to believe that right away, again they're gonna be looking at doing something over there. They want what they want, and they will do whatever they can to get it. They will probably feel the full wrath of NATO if they do make an attempt, because that is NATO protected over there.
oh yeah,
But
yeah, it's
yeah, it's
done.
a development that we all have to be aware of for sure.
I've actually read articles stating that there's about an 80% chance that China does invade Taiwan sometime in 2024, 2025. That's what I've read.
That's the
Uh
oh, interesting. Yeah, I
yeah,
was I
that's
was thinking mid 2023. I mean, again, I guess the odds only increase over time, but that's interesting. I haven't
it,
seen any articles myself.
yeah, it's actually very possible for 2023 as well. But yeah, that's what I've read between 2024, 2025, that they fully expect them to do it. But I'm thinking, like, why not do it now while the US is over here in a proxy war with freaking Ukraine and Russia? Like, it just right now would make a lot more sense for them to do it, because it seems like our hands are already tied up dealing with this whole other war. For now, us trying to be another babysitter to a whole nother country, like, man, they're gonna really try to they're gonna try to run us thin over here in the US.
Yeah, I mean, I would you really say though that we're even in like really in like a proxy war? I mean, like we're sending them stuff, but like I wouldn't really say like there's not really. I mean, I guess you can consider it that. I just view as we're doing like the bare minimum in Ukraine. So I wouldn't really say we're
The
using like
bare minimum. I think we spent like
yeah,
$20 billion.
but see that's again sending money and spending money and sending like supplies. That is like the bare minimum that you can do. It's like to like assist. It's I mean it's a lot of money. Don't get me wrong. That I'm not disagreeing with that, but like in terms of what we could do, like if we really wanted to, we could like really pull up and like really show out. And like we're not doing anything like that. Like
Oh
we're
no
like
no no
you
no.
know here's some new toys y'all can play with. You know shoot these at the Russians
Yeah,
and you know again that's like the bare minimum. It's
and
like
that's
you
why
know
it's a proxy war that we're in. We're pretty
yeah, that's what
much
I'm saying. Like you can definitely consider it like a proxy war, but
yeah,
I would say like
because
as far as like it using resources that like we would need for like China, I would say you know they're getting like whatever we send to the Ukraine, like you best believe the U.S. has already replaced that with like better and newer stuff. Like we're not, you
oh
know,
yeah, 100%.
so it's
We're
like it's not like we're really pulling from
like
stuff we would need to fight China.
the newest equipment that they're about to get is just our Abrams tanks now, which is like our top of the line. But everything else been pretty
Yeah,
much
that's
hand me
yeah.
downs that they've been getting.
Yeah, so again, like I would still call that you know close to bare minimum. It's you know it's an acceptable level, but you know if we really wanted to pull up and do something, we you know we we certainly could.
Yeah. What, bro? If we stepped foot in Ukraine, like Russia will be done in like a month, 30 days. I give them tops. If we actually participated, like boots on the ground, our military is
Yeah, boots on
just
the ground. They would you know
they, it,
we'd end it rather quickly.
bro, this war will be over in 30 days, bro. Like I promise you it would. It's just I watched a lot of videos, a lot of content on this war for some reason. I don't know. It's very interesting to me. And you could just see like the difference in military structure and how the militaries are ran. Like I've seen so many clips of it's just little things, right? The little details where like Russian fighters are having mismatched uniforms and they're not moving in synchron. Like it's a lot of little things, bro, that just shows the difference in levels of militaries. Like our military is no freaking joke. Like everybody is like top of the line. Where over there they only have small groups that are top of the line, as opposed to a whole military, which
Yeah,
is
they have
what we
like
have.
special ops and like stuff like that that
Yeah,
are
and our whole military is designed to be obviously not, SEAL Team 6, but for the most part, they're all still top of the line. So I
yeah.
don't know.
It would you know it's a game Russia really don't want to play. But again, it's like it's again though if we do go boots on the ground over there again in that case, you know we could end it with Russia very quickly, but that doesn't necessarily mean that other people won't step in to help, and that's where it gets like sticky. It's like yeah we could do that, but then you will pull China into it like unnecessarily for no reason, and like then the war is no longer with Russia, and it's again
It's a
we
World War
talking like
Three.
yeah then it's like actual World War III
And if we do
type
that,
stuff.
then yeah, well, I'm buying the dollar even more. Shit.
I mean, if we're doing that, yeah, you might. I mean, you well, yeah, I think you have worse things to consider than where you should be putting your money. But if that's at the top of your list of things to
Listen,
do, then
I'm making
yeah,
sure I'm
all in on the
making a
dollars.
bag. I need to make a big bag off of that data. I'll do it in my nuclear shelter.
I would go all in on oil. I wouldn't even go all in on the dollar.
Oil too would
Yeah, I'd go
definitely go
all
through
in
the
on
roof.
oil. I'd be like, okay, cool. So
Hell
we're gonna go like
yeah.
what, $300 barrel on oil?
I would be
Minimum.
shorting the hell out of indices, no cap. Shorting the hell out of it.
Yeah, and again, like we don't hope for this, we don't wish for this, but as you know, as individuals who have no real influence in anything, the least we could do is pull money from it, because you would be out of your mind to think that you know the institutions and then the wealthy are not going to pull their you know their money out of it. So you know, sometimes being a trader is not fun. You know, sometimes you really do make money off the back of you know terrible situations. It's not you gotta separate yourself from that. I mean, I made a bag off of oil when you know Russia first invaded Ukraine. Like, would I hope for that for my own benefit? No, not necessarily. But am I gonna also take advantage of it? Yes. So sometimes you know you guys might hear us talking, and it may sound like we're a little disconnected from you know the things that we're talking about, but at the end of the day these are things that are going to happen regardless of what we think or do.
Stay woke.
So you have to kind of disconnect and separate yourself as a trader, because you will be in situations where you're making money off the back of things that you may not ethically or morally agree with, which is a little difficult, but it's you know welcome to the game.
Yeah, and I say this in the nicest way possible, man. If you don't want to trade because it's just against your morals because of the situation, I'll gladly take all the positions on your behalf for my account. Gladly. Because there's too many people out here making money off a situation. In fact, like when there's chaos and when there's fear and when there's uncertainty, that's the best time to get rich. That is the absolute best time to go ahead and get involved when there is a lot of chaos, a lot of fear. Obviously, I feel bad for those that are in the direct path of all that chaos and fear and all that violence and stuff. But for me, I'm going to make sure I handle my business over here during the course of it. That's for damn sure.
Yeah, that's a fact. We are running at 11 o'clock. We have been 2 hours with you, family. Listen, we got 109 people still on here. First off, shout out to every single one of you. Hopefully, you guys have gotten some value. Dropped a like on the stream. Does anybody have final questions, thoughts? Ray, Abel, if you guys want to say anything before maybe we close it down, because I think we're at the tail end of the stream here.
Yeah, I mean, I just want to get everybody's thoughts and opinions. Like, I personally love the conversations that we be having from a fundamental, sentimental, and even a technical perspective. You know, just having the dialogue, right? But I want to see how you guys in the chat, do you guys like when we do that? Because that's one thing that we actually do pretty often, right? It's not like that we always come on here, family, we always agree on the same setups or same news events or anything like that. Like, we come on here, we speak our minds, we give our opinions, and you know, respectfully, we agree to disagree sometimes. And I think that more so than anything, that's super beneficial for you guys that are listening right now, all right? Because you guys are able to really go ahead and learn from it. You guys can always put your opinions as well in the chat. We always try to go ahead and, you know, answer your guys' thoughts and opinions as well. You guys can always have your input. And I think it's super dope. You know, I personally love when we do things like that. I see Eric said, yes, sir. Love to see the violence. Yeah, for sure. Thank you, girlfriend, getting tight of me. Time to go. All right, Wally. Good night, my brother. Appreciate you for jumping on. But yeah, you know, but you can go ahead and wrap us up, Skags. I appreciate y'all, family. Thank y'all.
Big bet. So listen, family, we appreciate you guys. I did drop the premium link in the chat. If you guys want to join us Tuesday, Wednesday, Thursday for live trading and execute with us, chill with us, monitor markets live in a real environment where we're actually pushing the button and taking these trades ourselves. We love and appreciate you guys. I'm going to put on some music as we exit here. We will see you guys on the live stream on Tuesday. As always, this is your boy Skag on behalf of Profit Society, and we're out.